Using five forces analysis to strategically position your firm in the market. The five forces analysis, developed by Michael Porter, is a framework for assessing the competitive forces within an industry that shape and influence the intensity of competition. This analysis helps businesses understand the attractiveness of an industry, identify potential sources of competition, and formulate strategies to position themselves effectively. The five forces are: 1. Threat of new entrants. This force assesses the ease with which new companies can enter a particular industry and compete with existing players. Factors that increase the threat of new entrants include low barriers to entry, low capital requirements, and low brand loyalty. High entry barriers, such as strong brand identity, economies of scale, and government regulations, can reduce the threat. 2. Bargaining power of buyers. The bargaining power of buyers examines the influence that customers have over the industry. If buyers have high bargaining power, they can demand lower prices, higher quality, or better services. Factors such as the availability of alternative products, the standardization of products, and the concentration of buyers relative to sellers influence buyer power. Strong buyer power is a threat to industry profitability. 3. Bargaining power of suppliers. This force assesses the influence that suppliers have over the industry. If suppliers have high bargaining power, they can demand higher prices for inputs, affecting the profitability of companies within the industry. Factors such as the uniqueness of inputs, the availability of substitute inputs, and the concentration of suppliers relative to buyers impact supplier power. 4. Threat of substitute products or services. This force considers the availability of alternative products or services that could replace those offered by companies in the industry. The higher the availability of substitutes, the more intense the competition. Factors influencing the threat of substitutes include price, performance, and ease of switching. Industries with few or no substitutes generally have more pricing power. 5. Intensity of competitive rivalry. This force evaluates the degree of competition among existing firms in the industry. Factors contributing to high rivalry include a large number of competitors, slow industry growth, high fixed costs, and lack of differentiation. Intense competition can lead to price wars, reduced profitability, and increased innovation as companies vie for market share. How to use five forces analysis. 1. Identify key factors. Identify and evaluate the key factors that influence each of the five forces within your industry. 2. Assess the strength of each force. Determine the strength of each force and its impact on industry structure. Consider whether each force is high, medium, or low. 3. Understand industry attractiveness. Assess the overall attractiveness of the industry based on the combined influence of the five forces. An attractive industry is one where the forces are relatively weak. 4. Formulate competitive strategies. Develop strategies to respond to the identified forces. For example, companies may focus on differentiation, cost leadership, or innovation to mitigate the impact of highly competitive rivalry. Summary. Five forces analysis is a valuable tool for strategic planning, helping businesses identify areas of opportunity and threats within their industry. It provides a systematic way to analyze the competitive forces and formulate strategies that can enhance a company's competitive position.